Welcome back. We shift our focus to the crypto market now. Institutional investor confidence waned this week with outflows from Bitcoin and Ethereum ETFs totaling over $1.1 billion globally. Meanwhile, the U.S. government shutdown over, lawmakers are expected to resume work on new crypto market structure legislation. Wiehann Olivier, partner and Fintech and Digital Asset Lead at Forvis Mazars SA, joins us now for a crypto catch-up. Wiehann, thanks so much for your time this evening. So crypto markets took a sharp hit in October, almost wiping out all of 2025's gains. What triggered that sudden sell-off before we start looking at what's been happening over this week?
Yeah, so I think there was a sharp correction at the first part of this month as well. Bitcoin is down with about 9%, which makes it the worst weekly performance since March now. And that's big for the world's largest cryptocurrency by market cap, making up more than 50% of the global market cap. But I think Bitcoin is now below a technical level where the traders effectively closely watch, which is below the 200-day moving average.
Yes.
So the big question is what is behind this, and there's a couple of factors here as well. The first being is the market has been really, really hot for a couple of weeks now. And some expect it to cool off, which effectively it did. And of course, the second aspect of it is there was a major DeFi hack that shook the confidence and triggered liquidations across the market, as you mentioned. I mean, there's over $1 billion in leverage positions that was wiped out in a single day. Thirdly, as well, I think there's global uncertainty and that affects the overall liquidity of the market. And then I think lastly, we do need to remember that a lot of institutional investors, especially those in the fund industry, financial year ends correlate with the calendar year ends as well. So they do expect to realize a lot of their unrealized gains the next 2 months effectively. So it's important to keep that perspective. It looks very dramatic and many analysts see it as a mid-cycle correction rather than the start of a bear market. But institutional flows still remain strong and on-chain data shows there's still a long-term sentiment and investors are currently not panicking.
All right, so a bit of a blip at the moment. But we did see a slight rebound at the top of the week. Maybe just take us through how much, I guess, political affairs, particularly the U.S. Government shutdown coming to an end, is filtering through to crypto markets.
Yeah, so I think there were two major factors, and you touched on the one from a regulatory side, but also the security side that I'll maybe just touch on as well. So if you look at the security, that recent hack that I spoke about, so the balancer version 2 smart contract was expensively exploited, which is a major decentralized finance protocol on the Ethereum blockchain. And effectively, one of the vulnerabilities was compromised. And effectively, within a 30-minute window period, the malicious actors walked away with $128 million in assets. Now, what's shocking is the balancer had undergone several independent audits, yet these flaws slipped through. And that just shows how complex these systems are and why stronger security standards are critical, better audits, real-time monitoring, and those types of things. But I think back to your original question on the regulatory side. So the US is moving forward with clearer rules. There's a draft bill that would give the Commodities Future Trading Commission more oversight over crypto spot markets, including custody and cybersecurity requirements, which is fundamental. The SEC is also working on the token classification framework under the crypto project, which will clarify which tokens fall under which security laws. But I think in the long run for investors, this is positive as it sets those clear and better security that will build trust and attract more institutional investors in the long run. But I think if you talk about the government shutdown as well, it was the end of the US government shutdown, as you mentioned, and which that's good news for the market, not only for the digital asset space, because during the shutdown, agencies like the SEC, the CFTC were limited in processing ETF applications and regulatory approvals, and that created a little bit of uncertainty, especially around Bitcoin and Ethereum spot ETFs. But now everything is back online. We do expect progress and those pending applications to also resume government spending that will increase liquidity in the broader market that tends to also support higher risk asset classes like Bitcoin and investment in that asset class.
So fresh optimism coming through, but of course risk remains, as there's been concerns around the data, the October data, and what that looks like still at play. I want to then look at what you're seeing when it comes to the altcoins, the alternative coins. We spoke about Bitcoin and what Bitcoin is doing. What have you seen with the likes of Ether and some of the other altcoins?
Yeah, so I think beginning of this year or mid of this year, there was a slight movement where we may have seen a transgression into what we refer as altcoin season, where there's a more focus on alternative coins. But the biggest concern that there is currently with the alternative coin space as well is a lot of them aren't backed by real world assets or aren't backed by intrinsic value as well, which makes it very speculative in nature. And for that perspective as well, it does create a bit of a gambling environment as well, where individuals would make short-term investments based on speculations and, of course, a lot of market manipulation in that sector as well because of the low market cap and the high volumes of liquidity as well. So I think in general, most cryptocurrencies like these altcoins tend to follow the trend of this larger player being Bitcoin. But we will see a slight transgression, especially with the implementation of real-world assets on a global basis that we see by traditional institutions utilizing the technology for that.
Wiehann, what does that then say about, broad-based adoption of crypto as a whole?
Yeah, so I mean, it's ticking along every single day, and I think if we take about let's say a step back 5 years ago, what the sector looked like then and what it looks like now. We've seen regulations evolve on a global basis. We've seen large institutional players like BlackRock actually utilizing technology to list some of their funds on the Ethereum blockchain. We've seen the listing of several Bitcoin spot ETFs. In South Africa as well, we've got now a listed company on the JSE that has a Bitcoin strategy reserve as well. So you see all of that motion and all of that momentum that's been built over the last couple of years move into the traditional space. And that effectively will increase that mass adoption and to a certain extent, that network effect that we want to see with blockchain-based digital assets.
Wiehann, thanks so much for your time and just taking us through the movements playing out in the crypto scene. That was Wiehann Olivier, partner and Fintech and Digital Asset Lead at Forvis Mazars SA.